Welcome to the PJO Insurance Brokerage Podcast. We cover different topics on business insurance in order to help you choose the appropriate coverage. We believe that being properly insured is just good business sense, and our experienced brokers will help design an insurance program specifically for your company's needs. At PJO Insurance Brokerage, we put our clients' needs first and foremost.
In this episode, we'll show you how to stay protected and operate with confidence through comprehensive pollution liability coverage. Running a manufacturing plant today goes beyond daily operational tasks. Yes, it's important to manage production schedules, but it's also necessary to assess risks, including environmental ones. A single spill or improper waste disposal or emissions can result in fines or legal action. How can you stay protected? Pollution liability insurance can be a great solution, allowing you to operate with confidence without constant worry. Here's a clear overview of the essentials. Let's start by exploring what pollution liability insurance is all about. Pollution liability insurance in California is designed to cover financial losses arising from environmental incidents. Manufacturing facilities face diverse risks, from accidental chemical spills to improper waste disposal, each capable of causing significant damage to the surrounding environment and leading to regulatory penalties. Unlike general liability, pollution liability specifically addresses environmental exposures and supports both compliance and financial stability. This specialized coverage helps manufacturers recover and resume operations more quickly. By investing in pollution liability insurance, California companies demonstrate that environmental responsibility and prudent risk management are integral to their business strategy. Now, let's dive into the key components of coverage. A well-structured pollution liability policy encompasses several critical elements, including cleanup costs. Environmental incidents, such as chemical spills or waste mismanagement, require an immediate response. Pollution liability insurance covers the costs associated with remediation, ensuring that incidents are addressed promptly and thoroughly. Legal defense. Lawsuits arising from environmental damage can be expensive and time-consuming. Coverage for legal fees protects businesses from financial strain while navigating complex litigation. Regulatory fines and penalties. Non-compliance with environmental regulations can result in substantial fines. Some policies address certain government-imposed assessments. Availability and legality vary by jurisdiction. And third-party claims. If a pollution incident affects neighboring properties or communities, coverage extends to claims for bodily injury or property damage caused by your operations. As a manufacturer, understanding these components helps you prepare for unexpected incidents and achieve broader protection. For this reason, incorporating pollution liability coverage into your California policy further strengthens your risk management strategy. Next, let's take a look at the environmental risks in manufacturing. Manufacturing operations are inherently associated with environmental risks. Chemical spills, emissions, and waste mismanagement are just a few examples of exposures that could lead to significant consequences. Chemical spills. Accidental releases of hazardous substances can damage ecosystems, contaminate water sources, and necessitate expensive cleanup operations. Emissions. Airborne pollutants from production processes can attract regulatory scrutiny and affect community health, resulting in fines or operational restrictions. Waste disposal. Improper handling or storage of industrial waste can contaminate soil and water, creating both legal and financial challenges. This underscores why recognizing risks is so important. By doing so, you gain a clearer understanding of your current insurance needs and those you may require in the future. Now, let's focus on the best approach for tailoring coverage to fit your manufacturing operations. No two manufacturing businesses are alike. Each facility operates with distinct processes, raw materials, and environmental challenges, meaning that a standard insurance policy may leave critical gaps. Pollution liability insurance must therefore be customized to reflect the specific risks your operation faces, ensuring complete protection. Here are strategies to tailor coverage. Adjusting coverage limits. Policy limits should align with the potential scale and frequency of environmental incidents. Facilities handling large volumes of hazardous chemicals may require higher limits than lower-risk operations, ensuring protection against cleanup costs, regulatory fines, and third-party claims. Incorporating pollution coverage for a manufacturing business in California can help address these risks effectively. Setting deductibles appropriately. Choosing the right deductible requires balancing cost efficiency with adequate protection. Lower deductibles provide faster access to funds after an incident but may increase premiums, while higher deductibles reduce premiums but require more out-of-pocket expenses. Tailoring deductibles to your facility's financial capacity and risk tolerance ensures both security and affordability. And adding endorsements. Many manufacturing operations face unique exposures that standard policies may not cover. Endorsements can be added to address specific risks, such as the transportation of hazardous materials, on-site waste storage, or specialized emissions management. These additions ensure that all critical aspects of your operation are protected, even those not typically included in base policies. We also recommend incorporating pollution liability into your overall risk management strategy. Pollution liability insurance should not be considered in isolation. Instead, it should complement a broader risk management strategy that includes general liability, property, and workers' compensation coverage in California. By integrating pollution liability into an overall insurance portfolio, manufacturers achieve several benefits, including robust protection. Coverage gaps are minimized, reducing exposure to unexpected financial losses. Operational continuity. Adequate insurance ensures that incidents are addressed promptly, allowing production to resume without significant disruption. And regulatory compliance. Coordinated coverage helps maintain adherence to state and federal environmental standards, avoiding penalties and reputational damage. That's why a solid insurance strategy, including environmental liability coverage, allows you to protect your manufacturing operations. Be sure to familiarize yourself with the insurance options available in California. If you're in California, you know that the insurance landscape is quite unique. California's regulatory environment is stringent. For example, recent debates around the state's Climate Superfund proposal illustrate the potential cost implications of environmental liabilities, which, according to the Los Angeles Times, would have increased costs related to environmental contamination. Natural hazard exposures, earthquakes, wildfires, and floods also warrant consideration, as California is among the states most prone to these events. So what does this mean? It means you shouldn't settle for generic insurance policies. Coverage must be tailored to local realities. For example, it's important to consider environmental liability tied to state regulations, as well as coverage for earthquakes, wildfire protection, and other region-specific risks. If you're curious about the steps to secure pollution liability coverage, let's walk through them. Securing adequate pollution liability insurance is not a one-size-fits-all process. Manufacturers can follow these structured steps to ensure comprehensive protection. 1. Conduct a thorough risk assessment. Evaluate all potential environmental exposures within your facility, including chemical handling, emissions, waste management, and other operational processes. Identifying risks upfront allows for more precise and effective policy selection. 2. Select the appropriate policy. Choose coverage that addresses the identified risks. Essential components often include cleanup costs, legal defense, regulatory fines, and third-party claims resulting from environmental incidents. At this stage, evaluating pollution liability insurance tailored to California can help ensure your coverage meets state-specific requirements and operational needs. 3. Customize the coverage. Adjust limits, deductibles, and endorsements to reflect the unique needs of your operation. For example, if your manufacturing process involves transporting hazardous materials, adding an endorsement to cover transport-related risks is critical. And 4. Implement ongoing review and updates. Continuously monitor your policy as regulations, technology, or operational processes change. Regularly reviewing coverage ensures that your insurance program remains adequate and cost-effective. Protecting the future of your manufacturing business is essential for its success. Contact our experienced brokers today to secure the coverage you need. Pollution liability insurance is a vital component of a responsible, safe, and sustainable manufacturing strategy. At PJO Insurance Brokerage, we help businesses safeguard their operations and build a secure, long-term future. Our comprehensive pollution liability insurance for California businesses, along with a full suite of business coverage options, comes with expert guidance from initial assessment through final placement. Contact us to discuss the right protection for your business today. Call us at 949-2360971 or visit us online at pjobrokerage.com.
Thank you for listening to the PGO Insurance Brokerage podcast. Our brokers have over 60 years of combined insurance experience, and we are committed to performing above the rest. If you would like to experience what it's like to work with business insurance professionals committed to superior customer service, please call PJO Insurance Brokerage to set up an appointment and review your company's specific insurance needs.